I gotta pump those numbers up. Those are rookie numbers in this racket.
Yeah, that's my alumni, you know what I mean.
Emotional damage.
Target locked. Ready to fire.
I gotta pump those numbers up. Those are rookie numbers in this racket.
Rookie numbers, absolute rookie numbers. Good morning, everyone, and welcome to the Morning Market Report. It's Thursday, November 20th, and we got a little bit of rain here in beautiful Dallas, Texas, but it's okay. The rain just fits the mood of what I'm seeing on the charts. We are getting a little bit of green here on the hourly, but Bitcoin still down on the daily and on the hourly. Ethereum slightly up, guys. Overall, what are we doing? As the thumbnail says, we're just making lower lows, just making lower lows and lower highs. And if we lose this level, we're very likely heading down to the $80,000 range ish. But there might be a relief rally in store. And guess what? Pie Bear actually thinks that the relief rally may take us higher than what OC does. We're going to talk about all that. We're going to talk about jobs data that just came out. And guys, the games, there's some FF games. If you know what FF games are, a military term, the FF games, going on with job numbers. We're going to talk about that. We're going to break it all down. What does it mean for the markets? What can we expect the markets to react? How can we expect them to react to this data? And a whole lot more today on the Morning Market Report. You guys know what time it is. Let's get it. Class is in session. Watch this. It works. Look at that. I told you I'd get it fixed for you. Class is in session, guys. Welcome, and we appreciate everyone being here. As always, the Morning Market Report brought to you by the only indicators out there that crush it on a daily basis. They crush it the best, in my opinion, in my humble opinion, it's Chart Prime. But I'll tell you who crushes it every day, and this is not an opinion. This is a straight fact. You can look it up. Look up in the encyclopedia and look up Mexican spaghetti badass, and it's going to show the picture of this guy. It's the Mexican Superman OC guy. What's up, bro? Good morning and welcome. How you doing today?
Doing great. Thank you for that really awesome introduction. I'm trying to also better myself, and look at that. I have coffee with no oranges. That is the right step to the right direction. Somebody say.
Look, I'm drinking. Look, I'm trying today, guys. I'm drinking my my coffee from my moon cup. So I'm trying. I want the markets to pump so that people I haven't been able to get out can get out. But yeah, coffee is good. Morning's good. Job numbers were good. Who knew?
Really? Are you kidding me? All right,
well,
let me just
hold on. Job numbers were good, but we went up on unemployment. So I don't know. You tell me how that works. Again, FF games with job numbers. We'll take a look at all of that today. We got a lot to break down. But yeah, you got good job numbers, but bad unemployment rate. I'm not even sure how that works. I don't know. Your guess is as good as mine, but I did do a breakdown for it. We got a nice breakdown going on here. Hey, BC Steve, he said, Chart Hacker member here. I didn't know you had a YouTube. Smash the like. BC, welcome. This is OC is here. I'm here, and here in about 2 minutes, we should get the Otter gang flowing in here. I think they are they're heading into us right now, so we should see the Otter gang rolling in too. But welcome, we're here every morning, man. I'm glad to see you here. Shout out to the hackers in the chat. Let's go talk to the chat. Speaking of the chat. And then let's get in and take a look at a quick look on the chart and then talk about the news, get the job numbers. Alex O Crypto, hot dogs in the chat. Shout out to Alex O Crypto here. Alexandra G, our mod queen, the CEO of Piper Academy, if you didn't know. 2Dub is in the house. Make it make sense. I can't make it make sense, but I can explain what I think is going on, Wick's wife. Infinite Team TA is in here. We got Dave, Digital Army Piper. I would ask you to come up and write something on the board, but we know that you can't stand up at those warm-ups. Funny story, Dave Digital. I've got a workout that I'm getting ready to start tomorrow. Did you guys ever see The Dragon? Go over here. Bruce Lee, The Dragon. Did you see that movie, OC?
Yes, I did.
The Dragon, the story of Bruce Lee.
You.
You remember the thing that he had on, and he's like, it's like doing 100 push-ups every minute. You remember that? So it's called. Yes, there's a name. Yeah? There's a name for that system. I can't recall it off the top of my head right now, but there's a workout place here called Body 20. You go in, you put on the suit that has like contacts built into it, and then you put on this other suit, and then you do a 20-minute workout that is the equivalent of doing a 2 to 3 hour workout without the impact on your joints and body, which, I'm broken from the Army for 22 years.
And so ladies and gentlemen, that is how real modern torture looks like.
Yes. So I'm going to go get a 2 to 3 hour workout in 20 minutes and my joints will thank me later. So, but yeah, I'm going to do that. That's happening. So, I will give updates on it if I survive. Like doing 100 push-ups, except for doing 100 push-ups. Makes my fight. Hey, I can't do that stuff anymore. My joints. I wake up every morning to take Celebrex, guys. For arthritis in my joints. It's bad. The Army has effed me up more than they have the economy, more than the government has the economy. I'll put that there. OC, how are we looking on the Bitcoin chart? Let's go talk about that first, because I'm seeing some sell-off. We'll come back, do the news, get into the so what. I got all this jobs data to unpack, guys. Stick around. Appreciate y'all being here. You guys are awesome. Smash the like button if you get anything out of today's content. And we will in return be here every morning giving you guys the news. OC, to the charts, Batman.
Let's go. All right, so let's bring out Chunky Candles in the house. So very quickly here.
Chunky Candles, yes.
Chunky Candles, there you go. So this is where we were looking at the beginning of the show. Let me throw it here. Next time you come visit Piper, I got another Gming here that we do the same thing, but we use just car cables and car batteries that also give you electric shocks. It's also they say it's a good workout. I don't know. Let me know if you will be interested in that.
No. I'll go with what I'm doing because someone said they'd like to see the science on it. FDA approved system. So there you go. Not Mexico approved. I am not trying to get shocked. Thank you though. Appreciate
it. Perfect. Love it. No kidding. We have a shock device here that is sells for fun. Just saying. Maybe I'll bring it up at the end of the class. But let's take a look at the charts here. This is where we left out, especially on daily, having this bounce up as a relief rally. Why? Because we had a very interesting zone right here, and we got the box, right? I mean, let's throw in a couple of indicators and brace yourself. We're going to get ready. Oh, and things are not wanting to bring... All right. Oh, I know what's going on. All right, so I have all of my indicators removed. That's because yesterday we were testing indicator access. All right, so no indicators today. We're going to be taking a look at just raw data and naked charts. All right, so very important. We had not only very interesting zoning here, and let me bring this up to my left, and that is because there is somewhere around here. That's where we start seeing that accumulation happening. All right. So that is a very interesting zone to start looking for a bounce if we're going to be having a bounce soon. And of course, we had something like a trend line here. In fact, it was just a little bit more stiff like this. So we were bouncing out of that trend line, coming down, finding some support, looking like we were going to do a goose heading here, just like we did this goose head. And guess what happened with that goose head? Little retracement, further move to the upside, and then bigger retracement, right? The same old goose head. So maybe if we're going to be having this kind of rally, I was looking at the same kind of expectations that we might have in here, right? So let's go and check out that goose head, right? So we have this one and all the way down, right? So this is what I was expecting, or I'm still expecting. Not only that, but also if we take a look at this zoning here, you'll see that we have another interesting zone, and that's the area that I was actually aiming for, right? I mean, I actually mentioned, hey, relief rally incoming if we are able to hold this trend line, and if we're able to push through that zero line. And my next target, it's going to be, and I know this is very, very tight, but between 94,200 and 96,600. So that was the area I was looking at. It's also truth that we have a big order block up in here. I cannot actually show it to you in real time because my indicators are off, but you'll see that these two zones in here not only overlap the bottom and the top, basically creating that very nice area of interest. So narrowing down this thing somewhere around these zones for the order block to be pushing or pulling the price action to the upside. That could for the best case scenario be taking us somewhere around here, but I highly doubt it. In fact, you can see that I am looking for this empty area right here as an overshoot, and that came from yesterday's analysis. So far, let me just wrap this up with a channel perspective. All right, so we already have hit one of our targets. The next target, if we lose then 89 to 90K, it's going to be 83, 84, 76. All right. The same gap that we've been talking about for a little while. Just so you know, I already have my open positions in here for spot entries. Remember, this is going to my savings account. And then when it bounces back up for the next dead cat bounce, I will be trying to sell a little bit of what I bought in here back in here, and then the rest is staying at my compound savings wallet. But so far, that's what I got, Piper, on both the 4-hour and the daily.
Yeah, I'll break down my outlook on Bitcoin here in a little bit. I do have indicators, and I also have some fib levels we're going to talk about, which were on the thumbnail. I also have a CME gap that we need to discuss because I can say CME gap on this show. I just won't do it over in Alex O's chat because I get timed out like a bad boy. Bad boys, what you going to do? Let's go take a look at the news, OC, and get in on that side of everything because we got a lot, not a lot, but we got some stuff that we need to unpack. There's a lot of jobs data that we need to explain. We're gonna mansplain some jobs data. So, need video proof, please, of what? I don't know what you're talking about over there. I'm watching the chat. You guys are just out of control today. You're out of control. All right, looking at the jobs data here, or at the macro data, I should say, on Bitcoin itself. Taking a look here at the metrics on Into The Cryptoverse. Right now, total crypto market cap, guys, coming in at $3.09 trillion. We're about to go under the $3 trillion mark. Currently, trend average fair value on Bitcoin is sitting on the crypto market cap total is sitting at 4.686 trillion. Undervaluation right now, almost 34% undervalued. But like I've showed you before, we can go way below this line. And all we really have to do is just kind of stay in a sideways range while that fair value range is rising. So I do think that we're going to go pretty much a lot lower than this, actually. We'll just call it that, a lot lower. What else we got over here? Let's take a look at the risk codes for Bitcoin right now, currently sitting at a 42.3. That means that Bitcoin's DCA level is about to enter the 4x range. 4. You guys know that's a good number. CZ said so. Let's go take a look at what we got over here on the Fear and Greed Index. Sitting at 11, extreme fear as of an hour ago. Bitcoin dropping a little bit lower since then. Right now, it's at 90,300, and this was at 91,000 when they put this out. So, Kabisi letter. U.S. stock markets extended their gains this morning with the NASDAQ 100 up 2% after the September jobs report shows unemployment at its highest since October 2021. Fed Chair Powell explicitly said he is watching the unemployment rate more than the headline job numbers. There is some important data there, and there's also a ticker missing. I'll fix that. There you go. Important data there that he's watching on the unemployment rate. He doesn't trust the job numbers evidently either. And I'm with him on this. The headline job numbers keep getting revised. Why? The headline numbers being heavily skewed by changes in immigration trends. As a result, odds of future rate cuts will rise as unemployment surges. Bad news is now good news for stocks. And the stocks getting a nice rally this morning. Crypto getting a sell-off. Is that telling us something that we need to be watching? And maybe that is that Bitcoin is going to continue to trend down because of cycle norms. It does not always follow NASDAQ. We can have the NASDAQ pump and Bitcoin does not. And that's what we're seeing today. The U.S. Labor Department officially published the September. Actually, we're going to come back into this because I want to get through the other data, and then we'll come back and talk about what X has in line with the economic calendar this morning. In the past 24 hours, we had 212,819 traders get liquidated. Total liquidations came in at $658.08 million. Largest single liquidation order happened on Hyperliquid. It was an Ethereum trade. It was OC, and he got wrecked for $24.2 million on a single trade. We know it was UOC. We know it was. What else we got here? Stock market. F8, I know. Looking here at the CNBC, let's give this a little refresh. This is giving us our TradFi stock market numbers right now. Dow Jones currently up 1.18% on the daily. S&P is up 1.54% and the NASDAQ is up 2% still. Russell 2K, small caps. Guys, crypto typically does well when small caps move. Your Russell 2K should be moving in the same direction right now as what we're seeing on crypto, and it is not. Russell 2K is up 2.13%. Volatility index slowing down a little bit under that 22 range that it was at yesterday, but still above 17. It's about at 19.9, almost 20 right now. How we're looking on the bonds market, 10-year treasury yield coming down a little bit, but it's still sitting at 4.112. Can't seem to break above this level or break below 4.0. It's pretty bad. Gold, it's up today, it's holding above $4,000, up about 0.25% there. Silver is up above $51. Copper is up 0.2, and platinum and palladium are both up. Palladium in the lead by 2% there on its upside versus the 0.5% on platinum. Let's go look at the crypto bubbles. Talking about that. Yeah, we just went from green to red. Looking at Bitcoin right now, it is down 1.6% on the daily. Ethereum is down 2.8% on the daily. What other movers we got in here today? Let's see. Solana's up on the daily 1.1%, getting a little bit of life there in it. Zcash continuing to rip to the upside, now above $700, sitting at 10.7% positive gains today, guys. Everything else slightly up here, 1.4, just slightly. This could turn around very quickly and very easily. Litecoin down 2.6%. Monero, the other privacy token on the flip side of Zcash, down 4.8%. And rounding out that top 20 is Avalanche. Any other big movers? Let's just scroll down through here and take a look. We got Aptos is up 3.8%. Pi Network, garbage. Don't even touch that, but it's up. I think WorldCoin, yeah, 3.7%. Oh, Cosmos, Atom, 9.7%. Again, legacy tokens getting their turn at bat here as the movers in the markets. So NVIDIA delivered big once again, and investors brushed aside the bigger pictures about AI spending. This is from the AI earnings yesterday at the market close. They delivered blockbuster earnings report, and once again, it mostly told investors what they already knew. The appetite for AI compute remains insatiable. They want more. Give me more. NVIDIA shares jumped more than 5% in the after-hours trading. Other stocks heavily tied to AI demand climbed in sympathy. AMD jumped more than 4%, Broadcom 3%, and Taiwan Conductors 3%. Guys, this is in the list that we put out in the Discord of stocks that I said you need to keep an eye on because of the data center drive, and it's not going anywhere. So there's been a lot of talk about an AI bubble. From our vantage point, we see something very different. Matter of fact, he even touched yesterday on some comments about Michael Burry. He said the Michael Burry investor made famous by The Big Short recently alleged that hyperscalers, the major cloud and AI infrastructure providers, are understating depreciating expenses by estimating that chips will have a longer life cycle than is realistic. And of course, he came out, Wings came out and didn't directly say Michael Burry, But he said, and we have this chip that is still operating at full capacity 6 years later. So he kind of addressed that statement that Michael Burry made. He also said that they can't keep anything on the shelf. They're selling out on everything. And there's just the demand is like 6 months out from what they're able to provide today. So that's what's going on there. Looking at the economic calendar, here's all the job numbers. I got a better breakdown than this, but I'm just going to bring this up for a second. Initial jobless claims. I want to point out this is from September. It was supposed to have been released in October. We got it in November. This was 224,000 is what it came in at. Previously, it was at 218. They thought it would be 223. Came in higher. Okay. Initial jobless claims for October. Now we're in something. This is weekly reports. Remember, these are the ones that come out every week and say, these are the people that filed for unemployment this week. This came out 235. Don't give a previous because the previous was 218. So 235,000 people filed for unemployment for that week of October 4th, and October 11th, 220,000 more. But check out the non-farm payrolls. Let's check this out. Let's do this. There we go. Non-farm payrolls. This was at positive 22,000. It got revised down to negative 4,000. Okay, so we got a big revision from September's numbers that were due out in October. So this is 2-month-old data, but they did do a revision from 22,000 to 4,000. They thought it would be 50,000, came in way higher, 119,000 new jobs. But unemployment rate for September went from 4.3 to 4.4. How does that work? There's the shift in the numbers that I say, I think this comes back. And just like we had a positive 22,000 revised to negative 4,000, I think this 119,000 gets revised much lower also to reflect what we're seeing on the unemployment numbers. This is the same reason that I showed you Jerome Powell doesn't care about this number. He thinks that this is all BS, really. He's watching this number. And so I did the breakdown here on it. Let's go over here and take a look. Actually, let's go back to X marks the spot and we'll continue on here because I want to talk about the unemployment rate. Unemployment rate rose to 4.4%, above the expected 4.3%. Unemployment's at its highest rate since October 2021. But wait, what about October job numbers that we're supposed to be getting in November, Piper? Well, we're not getting those. They're canceling the October jobs report. No jobs report for October. Why? Because they said that the government shutdown gave some skewed data and they don't really have it all. But let's look at the real big thing here. So what they're doing, they are combining, okay? They are combining October's job numbers, and it's probably a good thing it didn't come out because Goldman Sachs, they aggregate data for their analysts, and they actually think that the payrolls likely declined by 50,000 jobs in October. But that October report is not going to be put out, okay? So let's look here. Employment situation. That is going to be your non-farm payrolls. It was supposed to be out. It was supposed to be out on October 3rd. It's now going to come out on November 20th, right? That's the revised release date for September, which was today. We got September's, okay? But look here. Our numbers for October, supposed to have been out November 7th. It was canceled. They're going to actually roll this into the next month and combine them, which is the November period. So November will be November and October. It was supposed to come out on December 5th. It's coming out December 16th. So they moved it out. Why does this matter? Guys, it matters because December 10th is our next FOMC. Again, December 10th, is FOMC. December 16th is when we're going to get the October and November combined jobs numbers, meaning that they pushed it out past the date where they need that data to do that thing on that date. This is FF Games 101, and this is what I'm saying. We've got job numbers that aren't matching up at all. We're getting this crazy data saying, hey, look, 119,000. Oh, by the way, we revised 26,000 jobs away, gone, went from positive 22 to negative 4. This is very likely going to get revised. The one you can't really fudge, the unemployment coming out saying, hey, we got higher unemployment, then why doesn't this match? Well, that's a good question. Maybe we need to wait for the data to come out. How are we going to do that? We're just going to combine all of this and then push it out past into the next year, damn near, because at that point, there's no more FOMCs for 2025. When's our next one after that? January 28th. And right now, it looks like 28.8% chance that we don't get a rate cut there. Looking at December, 56% chance that we don't get a rate cut in December right now. So, guys, I don't know what's going on with this, but I do have the breakdown here from ChatGPT giving us all of this unemployment, non-farm payroll, unemployment participation rates. Summary. The September jobs report showed a sluggish but still growing labor market. Payrolls beat at 119,000, but unemployment nudged to 4.4, and prior months were revised weaker. More people are coming back into the labor force. Growth has clearly cooled since spring, and the vibe here is late cycle slowdown, not a booming economy, but also not a full-blown recession yet. There's your operative word and all of that. Wages and inflation hints. We also got some data on this morning. Wage growth cooled just a touch in September, up 0.2% in the month and 3.8% over the last year. That's slower than the market expected, but still healthy, which tells the Fed inflation pressure from paychecks is easing without killing household income. It's a mild win for the soft landing camp. I will point out, though, something that she missed here, and that is going to be the fact that a lot of people are picking up multiple jobs. We've seen that the second and third order job picked up called gig economy is on a rampant growth right now, meaning people are still making it by picking up 2 and 3 jobs instead of just one. So while the jobs data is there, a lot of it is just part-time add-on to what is already in the household. I would be interested to see what the household survey says, because the household survey, which will come out at the end of the year, for the quarter, household survey is probably going to tell you that a lot of this job growth that we do see is people got unemployed, picked up a second or a third job that's available. So that's why you would see unemployment go up, but job numbers also came up because, yeah, there's more jobs out there, but it's a bunch of part-time BS gig work being added in so that people can make ends meet. And that's where I think the disconnect is between higher unemployment or worse unemployment, but better job numbers, which, of course, yeah, because people got unemployed from their good job and now they're working 3 jobs to make up for it, which, by the way, does not pay as well as what a good salary would make. So manufacturing and business sentiment. Philly Fed manufacturing index popped from a nasty negative 12.8 in October to a much milder negative 1.17. Guys, manufacturing still down, just not down as much as it was. It was still a negative number in November. So factories are still reporting slight contraction, but the big rebound suggests the worst of the manufacturing slump may be passing and the good side of the economy stabilizing after rather than a crashing. I just also want to point out too, it's holiday shopping season. This is when most retail makes all their money. So of course you're going to have slightly better manufacturing to meet the demand of retail purchasing for the holidays. But at the same time, it's still negative when it should be a positive number. I'm pretty sure we don't have negative numbers at this time of the year in manufacturing historically. I would have to look that up, but I'm pretty sure that's what we would see. Market reaction and Fed policy lens here, summary for it. For markets, this batch is about as balanced as it gets, enough jobs to avoid recession scare, but softer wages and higher unemployment rate keep the Fed from reaching more hikes. And I want to point out that the softer wages piece there also tells me that the jobs are part-time gig work, not good jobs. So they're making less money, like I just said, but they're higher unemployment. Keep the Fed from reaching for more hikes. Treasuries wobble. Stocks generally like the soft landing story, and traders stay focused on the next Fed meeting and the jobs report in December for the real signal. It's going to be an interesting one in December, guys. Combined macro picture. What is the so what of all of this? Taken together, these numbers paint a classic late cycle picture. Job growth is positive but sluggish. Unemployment is edging higher. Wage pressure is easing, and manufacturing is weak but stabilizing. Inflation continues to cool without collapsing, which keeps the Fed comfortable on hold, and the macro story is still soft landing with slower growth, not a roaring boom, and not yet a hard landing recession. I think that's what we're going to have to wait and see happen here in December when we get those job numbers rolling into 2025. I think that we've got some messed up data. So OC, your thoughts on this is the reason that we're seeing worse unemployment and better job numbers because what I said, the gig cycle is just people are picking up 2 and 3 jobs to make ends meet. And really, we are much worse than it looks because, hey, look, we added all these jobs. And it's the same guy now working 3 jobs. You didn't add any jobs. You just added another source of income for someone who lost a bigger one. What's your thoughts on this?
Well, I see a lot of that happening here in Mexico, right? And I don't want to be that guy that, thinks the worst out of everything, but hey, coming from where I am, I don't know. That actually smells different to me. Let me stay with the narrative. If this is true numbering or true calculations, yes, I think that's what's happening. If not, man, I just came from different numbers all made up, right? And things not matching because I mean fake inflation of numbers. So either that or they're creating maybe some fake or just flash jobs like we know them here. Like, hey, you create something new here, we do some hiring, you just register them as employees, right? And they go into Social Security, which inflates the actual data. So, I mean, again, rabbit hole. Let's not dive that deep within that one. But yeah, long story short, I think that's what might be happening. People starting they need to survive, and paying rates are right now not as great, so they need to get more than one job or
Yep.
start doing some things differently. Yes.
Yeah, I think that's exactly what we're seeing. I also think that some of these numbers that they're showing could also be seasonal numbers. Guys, we should see job numbers rising because we should have seasonal job numbers coming in for the holiday shopping season. So it doesn't shock me to see that. And it doesn't shock me to see that people are working 2 or 3 jobs to get some extra money to at least buy a Christmas dinner, let alone Christmas gifts. But yeah, the question was asked by Wix Wi-Fi 89. She said, have they ever combined 2 reports together? A recent NDT article on this, and I'm just going to read it off here. I'm not going to bring it up on the screen, but let me get it to load here because it's taking a while to load. It's one of these big heavy ones. Short answer for that is no. 2013 shutdown, BLS delayed the 2013 employment situation by 1 week, but it still produced a standalone October report. So we've never seen a combined report happen where they go, hey, we're going to take October, shove it into November, put it out in December. And by the way, not before FOMC, after FOMC. So yeah, as far as anyone can tell from that, they've never skipped a monthly jobs report and then bundled it into the next one. Wix Wi-Fi 89. There's your answer. So all right, OC, let's go take a look at the chart here. What I'm seeing on this beautiful chart, and I'll show you guys some things that I'm watching here. There is some hopium on here. I'm looking at the 4-hour. You can see we got a nice little bullish divergence there from that point to that point, but we went lower. See there? So there's some bullish divergences that should be printing on here soon, but we are heading lower. And we did hit a rally yesterday on that NVIDIA news. When it came out, we did get a little pump up to the 0.66. And then what are we doing now? Rejecting for a lower low and very likely going to hit our lower high. I mean, and now we're going to hit a lower low. The levels I'm watching here is going to be your platinum pocket. If you guys don't know where these fibs are pulled from, they're pulled from all the way back here at our low in April to the high of 126. And you can see how wonderful, completely wonderful these have played out with rejections on top of the quantum reactor and the dynamic reactor right there. We wicked onto it perfectly when we could not get a candle close above the 382. Come down, we had support on the 50, crashed right through that bad boy, come back, perfect retracement. Right there's the OC retest before we head lower also. Now we had the 0.618, which was a very strong support range. We have yet to get up there and even retest that. I do think that levels we need to watch if we do get a little bit of a relief rally is going to be that maybe we come down and do a double bottom here. That would be a sign, okay, we double bottom. We did not make a lower low. Now maybe we have enough to get up through here to the 618, retest that before coming down. That would be line number 1 for a retracement at 94,000. I think that's in line with OC's was previous support over here anyways, right? Also, the better story, the better scenario for people to get a relief rally would actually be that we return back to the 50%, which was also a very key support area that we had previously that now we can look at. Do we have any playback here on it? Yeah. plays back here on it too. 50's got a lot of support history there for the price to go, hey, you know what? I think I want to go and test that support, see how strong it really was. And that would be us coming up into the 50 at the same time, hitting that dynamic reactor just like we did there and getting our rejection from that point, giving us a $100,000 relief rally to the for people to get maybe a second chance to get out. The problem is, I think that if we get that move, if it's strong enough, that could pull a lot of FOMO in. People go, the bottom's in. We see it all over X. The bottom is in. The bottom is in. And then we end up just heading up, grabbing all that liquidity from the FOMO buyers, and it becomes extra liquidity for other people. So be very careful there. Matter of fact, I got a piece over here that I was looking at. Let me go to the top here on X. And it's pretty funny. The herd liquidity mentality in 2025. $2,000 stimulus checks. Probably not going to see those. I showed you a video the other day where the Treasury Secretary actually made the comment that could be in the form of tax rebates. Okay. QT, quantitative tightening, is ending in December. That probably is true. We will start to slow down on quantitative tightening at the Fed. QE starts ASAP. Not the case. QT ending does not equate to QE beginning, quantitative easing. So that could actually be 6 months down the road. Could be within May when we get a new Fed Reserve chair, okay? And Jay Powell says, I'm out of here. F you all. Global liquidity will continue. We're not seeing that. We're actually seeing a slowdown on global liquidity. Fed rate cuts. Probably not getting those now. Treasury liquidity injections. They are injecting liquidity into reverse repos to sit on cash to bail out banks. We're not seeing that go anywhere else. Money printers return on again. That's going to be a hard one to sell me on because they're not going to do it until they get some other things lined up. That would be like putting on speed before you put the safety rails on, and they need to fix a couple of things before they can pump it up like that. So, that's what I'm seeing on the markets right now, guys. That's my 5 cents worth. I can't say 2 cents anymore because we're getting rid of pennies. They're gone. We no longer produce pennies. So there's my 5 cents on that topic. And I gave you a nickel for your thoughts, OC. How are we looking on? What do you think about the $100,000 level, OC? Did you get your charts fixed? Do you have indicators yet, sir?
Yeah, absolutely.
All right. I want to talk about that $100,000 level, and then let's look at Bitcoin, some higher time frame stuff, and let's get into alts, maybe talk about gold, and take a look at the DXY. I'd love to hear your thoughts on all of this. What you got for us? You're muted.
All right, that's what we got.
There you go.
There we go. Finally, we have some beautiful indicators. So as you can cleanly see right here, well,
oh my God, what are you doing? Fix your shit.
Everything here to make sure that everything is up and running. But let's go get it. So right now it's already clean up. So 100K areas right here, it's very clean. Well, right now it's very clean, but we can see that we have dynamic reactor coming in at that same area. Not only that, we also have quantum reactor coming on that same area. And then we start bringing up a couple of other stuff. Let me clear this up for a second. We'll see that also that same zone, it's coexisting with a previous trend line in here. So remember, it's not exactly where is it at, but where is it going to be, right? So why do I say this? Because if I have a trend line like this, which is already right there, automated weight, look at this, as we go. So we will have an area of collision somewhere around that 99K, 99,700, 100K, right? So looking to do something like this, and then we'll having that rejection. So, but that will absolutely depend on our oscillator. If we have the strength to break through and do something like that, I will say that yes, we can hit this zone, but this relies on here. And this coming up. And even there, look at that. I mean, this is exactly what we're looking for, right? To get that 100K area. And let me paste it over here so we have a much better representation. And even though if we hit the dynamic reactor in trend line, well, we are still susceptible of losing that zero line if our money flow stays below that zero line. So, I mean, so far, getting ready to break that range, but it's not looking good. And so far on the micro trendings area, right, 30 minutes, well, yes, we're finding some support. Let's wait for my oscillator to load. And Come on, there it goes. We are looking for a possible flip of the ribbon within the next 30 minutes to 1 hour. So if we're able to hold this ground at 90K to 185, I think we're golden for the next target at 96. And if we make it to 96, I think we're golden for that 100K. Other than that, I think we need to stand by to see what's going on.
So something else I'm watching on the charts too, OC, and I don't know that we're going to hold that 90,000 you're hoping for. I think we may head down to 89,620. And the reason I say that is because we have a CME gap that was just formed from yesterday's market close. You guys, these are futures markets, and so they closed down at night, right? When they closed yesterday, they were down here at a level of about 89,585. And we have a CME gap now from where we opened up on the market futures for this day's trading session from last night's close. So we do have a CME gap there from 19 November coming in again about on the bottom side of this, about 89.6. So do think that we will go down and close that out since we're that close to it. But on the higher time frame, some things that I'm watching over here, OC, is best, we talk about the 100K being a great scenario on the 4 hour, right? We'll look at this on the 4 hour. We're talking about that retracement back up on the 4 hour here, back to, I'm on a daily, go back up here to that $100,000 mark, which would be your 50% fib. But really, the best case scenario, which is, I've showed this 100 times if I've shown it once, would be a return back up to our golden pocket levels here. This is from the bottom, from tops to bottoms of markets, right? Giving us projections for the next cycle top. We had this on here over a year ago as our target range. So beautifully played out there. But this coming back up to that 618 level, that's 103,000. That would also be right in line somewhere with a retest of the 52-week simple moving average. And historically, we do relief rally back to that over and over and over again. Once we break it, that's what heads us into the crypto winter. So if we're going to play this cycle like it typically does, which it plays out on timeline and everything, we just didn't get the euphoric move like we typically see, but it does, play a lot of most of the time, even going back further. We can go back here and we'll see it here. We didn't quite make it back to the 52 week, but we did come in and hit on the bull market support band there, right there, bull market support band. So we did get another relief rally there. And those are pretty decent rallies. We're talking this cycle here to the bull market support band was a move of 73%. Back here, this move from the bottom to the 52 week, which also kind of overlapped a little bit there with the bull market support band, but that was almost a 50% move. Same as here, this was about a 50% move also, I want to say. I am going to say it, 45. It was close. So, a good move back up. If we want to talk about the real hopium move, it would be a relief rally up to get that second close, or I did that totally wrong because we're actually curving right now, would be that relief rally back to that 52-week simple moving average and then continue on with our crypto winter. But that would give people a $103,000 Bitcoin move. That would be a fantastic move for altcoins to give people a chance for altcoins to get out of them and maybe save some dry powder for what is coming. So Lunar Beach just said there's an anchored VWAP from the halving that sits at about 87,352. I guess that's a level to watch also. Keep in mind, we've seen Bitcoin do 50% retracements and continue a bull market. I just want to point that out. We did it back here. Here's a drop of 55%. And then we bounced. Now, keep in mind, we were above the 52 week, and that's where we got our bounce on that at. But if we were to look at a 50% retracement here from our top, guys, it's coming in pretty damn close to our 50% retracement here, this is pulled from tops to bottoms. Okay, so this is pulled from the bottom of here up to there. Retracement down would be 50%. Would be about 70,000. So that's pretty interesting number there that we could come down to and still continue on because it would only be a 45% move, which we've seen historically happens. So, I'm not saying we're completely out of any type of bullish structure. We're still on a high time frame bullish structure of higher highs and higher lows. But until we come back and break that 52-week SMA, I do think all bets are off for a new all-time high. Obviously, if we reject at that level, we're not making a new all-time high. It's pretty simple. Oh, see, how are we looking on the DXY? Let's take a look at gold. Let's get those two pictures out of the way, and then take a look at a couple of alts, and then we will get into a couple. We'll look at Nvidia stock and stuff like that. AMD from yesterday on our list. We're going to start doing some updates on that list. So, what do you got for us, OC?
Absolutely. So on gold, looking good. I mean, fairly good. We're still hovering over the dynamic reactor. We're still pretty bullish. Our prime score it's fairly high, and our consolidation score it's in the middle, which means that we're strongly consolidating, and most likely we're going to have one or two more peaks up and down as we finish this channel. This is a downward channel. They usually tend to break to the upside. Remember, that is not a premonition or anything like that. It's just what is on the books, right? So they tends to break to the upside. Still, keep an eye on it because we're having right now a possible reversal. But our True 7, it's looking great, and our money flow is actually pointing upwards. So that gives me a little bit more of hope. Let's take a look at the 4 hours because we've been killing it on the 4 hours. I mean, remember when we went all the way down here and I told you guys, everybody's going to be telling you that it's a flag. Everybody is going to be telling you this and this and that, but keep a track on the range, right? Keep track on the range. And guess what? We're keeping track on that bigger range. Remember, the 30 minutes was talking about this itty bitty part, but in the macro spectrum, we do have a farther and bigger picture, which seems to be about the same size. So, what is it coming? Right now, we already have a low. There we go. We're fighting to get the high. I think we're going to get the high. We're highly bullish, and we're about to break that consolidation zone. So, the next target will be below 4,237. Why is that? I believe that we might have a little bit of a lower target to go find this low. So this high in here, this low, and finally, we're going to get that bigger movement to the upside. Important. Something is right here on gold technical analysis, all right? We haven't lost this trend line. When we lose this trend line, well, it's not time to panic, but remember, a lower low is incoming. This is tightly related to the global economy and especially to the uncertainty in the markets. Remember, markets hate uncertainty and they go and find refuge on gold. So something important needs to happen on the stock market that gave us the pump that will actually get all the way up. But if we don't have it, remember, just a little bit of that rally coming back down when things are looking great in areas of taking profits, and we're still within this same range. And I think that we're going to be doing that for one more month until we start defining whether if the economy is turning to the right way or not. But so far, looking great on gold. Let's take a look at something like copper. We talked about copper a couple of weeks ago, if I'm not mistaken.
Copper's on our list. Yep, copper's on our list.
Get it. And we were talking about the breakout, the possible breakout of this line. We were just looking above that dynamic reactor. And guess what? It's actually playing out. So far, we're seeing a little bit of a rounded top. That is fine. Remember what we talked about copper, that we see these typical moments or movements and then still within that range for a continuation. So flat, positive, bullish continuation. And let me just bring it up for the 4 days so we have a bigger picture. And remember, we're still pointing upwards and we are expecting to have some volatility as we had it. All right. So keep an eye on that area. In fact, what I'm going to be doing right now, let's go back to the 4 days. I'm going to be going over and adding my regression channel. Here it is. And I'm going to be taking a look at from this low all the way to this high. And that is because I see a clear support zone right here. All right. So that's what we're going to be looking at. So far, looking bullish. We are hovering above that 50% area of the range. I believe that in lower time frames, we might do something like that and then hitting the top, right? Something like this, right? Hitting the top and then finding the bottom. So once again, I think that we could be doing something like that and then finding the bottom. That's because we're above that center line of the channel. But yeah, absolutely. That's what I see on copper. Let's bring up my crypto bubbles. here really quickly. On crypto bubbles, I see a couple of very red and very big points. In fact, Adam is in surprise coin right now because I mean, I was looking at it yesterday and I decided to wait, but let's take a look at how Adam is doing. So I got it right here. In fact, it's one of my legacy coins that I still like and enjoy. Let's take a look at here, and I got it here. Something about Atom is that it was a little bit of a disappointment when, well, you can see the actual chart, right? On the 4 days and on the 4 hours, it's not looking that great, although we do have a little pumping here. Something interesting is that we already have the big body breakout, but at the same time, we have, look at that, an inverted hammer, right? Usually when we start seeing that inverted hammer, that is a topping signal. And then right now we're having an indecision getting closer to have a flip of the ribbon. Right here is where we need to wait a little bit, because depending on how this is developing, if we have a more flat flip of the ribbon, that becomes a goose head with that peak all the way to the right. That means little retracement, further move to the upside, and then bigger retracement. All right. But if this turns around like this, basically having a more pointy top like that or like that, well, then that is a flip of the ribbon. And most likely we are going to be losing dynamic reactor and going lower within the same ranging here. So next targets for re-entering for a possible long 258. And you mentioned something important yesterday, and I want to say it once again in here. Let me bring this up. And hey, what are we looking for longs, right? The trend is bearish, and that depends also on the time frame that we're looking at. I'm saying that because I just mentioned areas of entries. Yes, we're still looking for area of entries, but guys, make no mistake, we are bearish. Look at that. We are bearish, and we've been for a long, 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 long time, right? So I mean, there's not much to say it other than, yeah, if we're looking for a long, it's just because we're looking for the relief rally, right? Or at least to be within the same range. So other than that, looking for that possible support or that possible support. And then after we start breaking this trend line, that's when we start looking for serious targets. And you can see that I have a rejection target already set up at 4.900 196. Let's take a look at a couple of other coins. Like for example, right here I have not OP. Come on. I would like to take a look at SEC. We were talking about it 2 classes ago. So where is it? SEC. I got it somewhere around here. And man, did I remove it? Oh, here it is. All right, perfect. We got it right here. All right, all the way at the bottom. This was our last analysis, looking for possible fake out, coming back down, rejection, and bouncing back up. As you can see, it wasn't exactly as we timed it, but it actually played out as we were expecting it. All right, so there it is. We had the breakout, we have the retest, and then continuation. We need to take this area of resistance. And this is not that great, but also not that good, because it seems like we are creating a flat top triangle. This kind of triangles tend to break to the upside. But guys, again, make no mistake, we are bearish on Bitcoin. And if Bitcoin really dumps, I believe these altcoins are also going to dump, even if I really like them, all right? It's because, I mean, I need to be clear. I really, really like SEC. So let me just lock this up. There it goes. We're getting to a rejection zone. We're also getting something in here. So wait for that flip of the ribbon and wait also for that little triangle reversal and see if we're having that rejection. So far, I'm going to be looking for a short up here. Other than if we break out, perfect. My next step will be rejection in here, and then continuation, longing it from here. So next area of long here, and then next area for shorting it is going to be closer, somewhere around these zones. Remember, it's not just because the price action gets in here, it's because the price action gets there, because we have extortion, and because we have a flip of the ribbon, along with maybe some tiny candles at the top, getting ready for a dump as we hit that resistance. But yeah, that's a couple of things that I already have in here for altcoins. And other than that, just kind of like a sitting in my hands, waiting for Bitcoin to take a decision. Most likely, and it pays me to say, we might still have more downside throughout this upcoming month.
Yeah, I think it's possible. We are seeing some strength on the stock side, which the tech sector does tend to translate over pretty well to crypto. Usually, we're seeing a little bit of a divergence from that lack of correlation right now. But looking at Nvidia, I said I wanted to go over this and maybe AMD. Looking at the 4-hour on Nvidia, and yesterday, guys, I said we were getting a nice bounce here on the dynamic reactor. I gave a target here for us. We are getting a small pullback this morning on the chance that we're not going to get rate cuts. But we are seeing here a nice little fib retracement. Let's check this out. This is being pulled from this one here. This is being pulled from the low that we had back here in 22 October to our high. And you can see we also got a bounce on the platinum pocket, the 887 there being our candle close bounce area. So that's one thing that I'm watching, and we are coming above the 50. Well, we opened above the 50. We're coming down, but I would watch for a golden pocket bounce here. If we do come down, watch for a level around 188 to 190 before we bounce up and go to our target up there. I do think that is going to be our target because if we turn this and we go to the next level coming from the top here on the 29th of October down to our bottom, you can see we're going to be sitting the platinum pocket. The 786 is going to be right in the middle of that green range, top side of that coming in at 208. So I would be watching that pretty closely for that to be the move that we make, a pullback to support, get another bounce there. We do have that. We are above the Bravo band and getting a bounce on that dynamic reactor is a very bullish play. Looking at AMD right now, guys, we did have a huge gap here that's still unfilled going back down to 179. I don't know that that's the case, but we are seeing that our Bravo band here is starting to make some, a nice wave down. We are seeing that we still have more signal line, very much unlike NVIDIA. NVIDIA, go back here again. We're actually crossing over for a bullish move. AMD, on the other hand, still has some downside motion. We're not seeing any sign of bright green candles like we are on Nvidia here. So I do think that this comes down, but the level I would watch more so than filling this gap would be a double bottom down here in the support range on that dynamic reactor, which is coming in at about 207. That's what I would watch there on AMD. That's what I have for Nvidia. I think we've got about 4 minutes. You got one more time for one more small alt squeeze in there if you want to bring up one of your favorite alts that you're watching right now.
Absolutely. Let's take a look at those in here. So let's use our alerts. Let's see what it has been ringing. One of those, it's IRL, ICP, and BNB. Let me do a quick striking here and then try to get them all together. So let's start with IRL. IRL, we have the breakout. Remember, we were looking for not only rejection coming back down onto that trend line. Remember this one? It went just a little bit higher, coming back down into it. We're having this next support, but very interesting. And of course, we're bearish. Lower highs, of course, lower highs. Yes, we have a bullish divergence, but we need to hold and look at that money flow. It's just not cooperating, right? I mean, the volume is accumulating. So do wait for the next support zone, which is going to be even lower, somewhere around 0.72. Look at our consolidation score, ready to break, almost about to break, and we're pretty bearish, which signifies that most likely we are going to be breaking to the downside. Let's bring a couple of other indicators around in here. I want to see the support zones. Perfect. We have a support right around 74, 0.7499, and the next area coinciding with that trend line somewhere around 0.71. Keep your eyes peeled, and if we are able for this goose head to break above, that will be a little bump all the way to 0.86. Again, guys, I mean, right now, I'm talking about longs because that is the next possible reaction that I see, like immediately, the next thing that we could be able to trade. But that doesn't mean that I'm just looking to get something like this, all right? I mean, for the best case scenario, we're talking about, some little movements like this ones for then a rejection, right? Like this ones for then a rejection, so on and so forth. So again, we're not talking about, hey, catching the very bottom of the upcoming crypto bull market, right? So just mentioning that. Let's take a look at ICP. ICP is within the same areas and same analysis that we had on Arrow. Coming back down, we already have some tiny candles. We should be pumping, but we're having a retracement. Let's bring up again those areas of support and resistances, and we see that the next area of support, it is all the way to 4.32. So let's keep tracking it. We're bouncing off this other trend line, coming into this next one. So more downside it's coming. The only way that I could be looking for a long on ICP at this moment, because of this loud order block, will be getting all the way in, bouncing back down and having some support. That's when I start considering maybe a long. But so far, I think we're going to have one V-shaped recovery in here. And just to finalize, BNB, because it's tied to the broker, all right? And BNB has a very strong support all the way down here. Again, everything is looking like Aero, ICP, and BNB. I was expecting this breakout retest continuation for the best case scenario. We already have the flip of the ribbon. We have that possible retracement. Guess what? We bounce from that area. So once again, we're getting back at support, and that's the only reason we're talking about a possible long, all right? Because we're getting this itty-bitty movement. If we get this itty-bitty movement and then we hold the support, we're looking for a bigger little movement. So you might be able to catch this one in here. But so far, look at this, it's curling back down, and I don't think that we're going to have so big of a movement to the upside. We first need to hit the 839 zone.
Okay, there you go. OC, appreciate you, man. You got a class you got to run off too. But if you guys got anything out of today's session, please hit the like button. We appreciate you guys. 65 likes and 70 viewers, so we're pretty damn good. You guys are awesome. Appreciate everyone that joined us here today. OC will be live today at 7 p.m. Eastern Standard Time with trade setups with OC Guy, and then tomorrow morning, BC Port Corp will be back here doing the great stuff. Good morning, crypto. So OC, appreciate you, man. Much love to you. You got to bounce. So
thank you, Piper. See you later.
Oh, absolutely, man. All right, guys. Thanks. Appreciate you joining us here today. But we're about to head over to Crypto Princess. She's actually doing a really good session today that's already in progress on Bitcoin ETF. So if you ever had any questions about that, might be a good opportunity to go learn about that. But guys, until next time, thanks for joining us here on the Morning Market Report. We'll be back here tomorrow morning, 10 a.m., bringing you guys the news, the facts, the headlines, and everything you need to have knowledge. Until next time, guys, trade safe and stay primed. We'll catch you guys later. Peace, love, profits. We're out.
That's the rap. Chart stack data never lie. Piper led the mission, OC in the sky. Spaghetti on the screen, but the vision stay prime. Chart prime visual, signals on time. Alumni strong, we built from the grind. Lessons in the market that'll outlive time. Knowledge is profit, you know how we run. Till the next one, stay sharp, get it done.
You can't handle the truth. Emotional damage.
We'll see you at the next
They don't
one.
know what the fuck they're doing.
Morning Market Report out. 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 Out.
Boom shakalaka!
We'll see you at the next one. Morning Market Report out. We'll see you at the next one. Morning Market Report. Ow.
That was awesome, dude.
Hey, it didn't break. What else you got?